What's up, y'all? Let's let Instagram go. There we go. So yesterday, I failed. I made a commitment to go live every single weekday to help others on their path to financial freedom. And I didn't do it. I relapsed into my comfort zone. Now it's not like I was just sitting around. I recorded an awesome podcast, led 2 powerful co-living trainings. I talked to capital partners, handled insurance and renovations. I was deep in the work, but I did not prioritize my new habit. And that's the reality of building new habits. You're going to fail too. It's just part of it. It's part of the journey. So the real question isn't if you'll fail, it's what you'll do next. Are you going to use that as slip up as a reason to quit? Or are you going to say, damn, I'm human. It's okay. Let's go live today and let's keep going. Because consistency is not perfection. It's the courage to keep showing up even when you miss a day. So you failed yesterday. Cool. You're in good company. Now go again. That's all I'm doing today, right? I missed out on the live training I said I was going to do yesterday. Super busy, fell into my comfort zone like a lot of us tend to do when building new habits. And it's okay. Either I stop showing up, right? I just give up, or we just keep on going. So with that, let's get started with today's live session. All right. So today what we're going to be breaking down, we're building out, for anyone who's not familiar, Michael Manatskayan here. I've gone from a handful of properties, 3 properties, to over $22 million of real estate in less than 5 years total since my first property, and the most growth has occurred in the last 3 years. What I'm doing every single day, every single weekday, I'm doing my best to try to provide you guys as much free value as possible, at least throughout the month of June, leading up to a couple awesome webinars that I'm doing for you guys. If you want to sign up for webinars focused on financial freedom through real estate, understand what that has looked like for me and how you can do the same. If you want to master deal analysis, especially understand the co-living model, I'm doing a whole training for you guys. If you want to understand how I'm consistently getting great creatively financed deals and buying them using none of my own money, or you also want to hear about my super investor cheat code, sign up for my webinar. I dropped the link. I think it's everywhere. You can definitely sign up for it. I dropped the link. I want you to succeed. I'm here to help you guys. If you're not familiar with my free Wealth through Real Estate community, I'm going to give you a little bit of a preview for that today, just so you can leverage some of the tools. Today, what we're going to do is we're going to build off the last couple of trainings where I've been focused primarily on helping you understand the basics of financial freedom, right? What is financial freedom? Why is budgeting so important when starting out? Just so you understand your numbers, understanding your income and your expenses, and then that is what is your savings, leveraging those savings to invest, and understanding your timeline to financial freedom. Today, we're going to be talking about net worth and why that's so important in tracking your overall progress through your financial journey. First of all, it's good for you to track because you have a KPI, a key performance indicator, showing you kind of what's going on. And ideally, your net worth continues to increase, although it's not exactly the same as your financial freedom or your cash flow. And I'll show you all that stuff. I got a free spreadsheet, free trainings to help you guys out in addition to this video. So with that, we're also going to be talking about the financial freedom tab of the tracker that I provide you guys absolutely for free in my financial freedom blueprint training. So let's just get started. I'm going to just show you guys real quickly. If you're not in the free Wealth through Real Estate community, you are just missing out on free trainings, tools, and resources. I'm just trying to be as transparent as possible to help you guys out on your journey, because these are the things I wish I knew 5 years ago when I was starting out, actually 7 years ago when I was just starting out and learning, 5 years ago when I bought my first property, and 3 years ago when I started to go from a couple properties and scale that massively to a huge portfolio that allows me to work from home, to build as I choose, and to focus on the parts of my business that I care about. For those that are already real estate investors looking to scale, that is what my super investors community is for. It's for real estate investors that are focused on scaling their portfolio to achieve financial freedom. If that is where you are at, you need to implement some more advanced strategies like using other people's money. So how to effectively present deals and raise money for them so you're not using any of your own money. You want to buy better deals that are ideally creatively financed so you can scale, or you want to maximize your returns through co-living and other advanced strategies. That's what super investors is for. It is not for everyone. And that's not the point of super investors. It's for those that are ready to take things to the next level, who have already started the journey. I provide tons of free trainings for everyone else. And I want you guys to take advantage of my YouTube. I go very in detail, very in depth to help you guys out. Plus my free Wealth through Real Estate community. I'm giving away What people charge tens of thousands of dollars, I give it all away for free. I give so much of that away for free that people charge so much money for. Take advantage of it. This is your life. I know you're watching this video because you want to be financially free. You're working towards something. You're not wasting this time during this day just doing this for fun. You're doing this for an actual end goal, is financial freedom, so that you can then pursue whatever you actually care about in your life. Financial freedom, time freedom, then your passions, right? You pursue whatever you actually care about in life. I know it's not money. Most people I talk to, it's not about the money. It's about what you can do now that you don't have to worry about money. And I want that for you. I genuinely want that for you. So with that, let me start screen sharing. All right, we're going to share screen. And do the window. Boom. So if you're not familiar with my Wealth the Real Estate community, absolutely free community, you could sign up literally for free. I dropped the link for you guys. I can even share it on both Instagram and YouTube. So there you go. I'll put it on here just for a second. Just go on school, Wealth the Real Estate, or Wealth-REI, right? That'll get you there. And then if we go to the community, this is the forum board. You can communicate with over 1,200 members, real estate investors. One of the biggest things for me was not having the community that I needed when I was starting out, people to help me answer questions and to see what was possible, because people in our daily lives, they're not really the people that are going to help us achieve something that they've never achieved. You need to be in a room of people who have done the things that you want. No bigger cheat code right now than doing that virtually, as well as meeting with people in person. That's kind of the fun part about the map. You can see literally, well, we got people all over the world, but primarily in the US, you can literally see, where are people? How can I hang out with them? How can I connect with them? This is such a sick feature. Thank you, school. All right, so there's free trainings in here, and this is what we're focusing on today, the Financial Freedom Blueprint. You can go in here and you can watch a very in-depth, detailed training on this, and you can grab the budget and financial freedom tracker that we're going to be using today. As a quick reminder, so I just grabbed a copy. There's instructions to start with. There's the budget component, right? This is for you to actually track your income and expenses and get a beautiful summary telling you, how much income do you have? How much do you spend? So then what's left over for savings? What categories are you spending the majority of your money in? What is your overall savings rate? What percentage, not just dollar amount, but what percentage of your income are you actually saving? And then how much of your spending is going towards needs versus wants? Get nice little charts too. I'm a nerd when it comes to spreadsheets. All right, so today we're going to be focusing on net worth. The best way to think of your net worth is it's the totality, it's the sum of all your assets versus your liabilities. Your assets are things that are worth value. Your liabilities are essentially your debts. There are liquid assets like cash, right? So we'll go through that real fast. Like your cash, for example, is a liquid asset, cash in the bank. You have savings accounts, checking accounts, high yield savings accounts. So if you are storing some of that in high yield savings accounts, you need to add more, because if you're like me, you have lots of bank accounts. Just insert a row and that's it. Just insert the row. It'll somewhere in the middle, and it'll just add it is in here. So that's the most obvious one, your cash savings, your liquid assets. Then it's your investment assets. I separate those into what is taxable, right? Like, so if I'm investing in the stock market or in CDs, I put that in here. But if I have retirement accounts, like his taxable investment accounts, I can just sell those things. Bitcoin, taxable, unless it's in your retirement account. Most people, you just have your Bitcoin in a taxable account. You at any point can sell that and you're not tax advantaged. You don't have tax advantages like you do in your retirement accounts. Depending on the way you structure your Roth, your 401k, or your health savings account, your HSA, you have a lot of tax benefits in your retirement accounts. Those are part of your assets. Then you have hard assets, right? This is your liquid cash savings, your taxable investments that can then be sold quickly, versus your retirement investments that you can't really just sell and tap into as easily without penalty, or like you have to be at a certain age to avoid the penalties. Then you have your hard assets. Well, most people, if you're not renting, you have a home. What is the value of that? If you have rental properties, you have 1, 2, 10, 15, 100, I don't know. You track the value of the properties here. We'll talk about the debts right after. You have vehicles and you want to add that value in here, you're more than welcome to. I'll be honest, I don't spend a lot on cars. I've never spent more than $15,000 on a car. We buy ours cash, and maybe it's not the best use of cash, but for us, it's better than having a large monthly payment. So we We don't even worry about tracking our vehicles. Some people have really expensive cars. You got a $100,000 truck. If it's worth that, that's an asset of yours. Even though it's a hard asset, you can't just sell it as easily. I also include hard assets as my lending. You can include that wherever. You can include it as your investment, your taxable investments. I include it as a hard asset because it's being lent out. I can't really do anything about that until I get the money back. And then whatever I get back just goes into my liquid assets. So it doesn't do a lot for me to treat it as something that's easily sellable, something I could easily tap into. And that's not really what your net worth is. Your net worth is not tracking necessarily how much money you have coming in or anything like that. What it's tracking is how much are you increasing like your overall value, your assets, the value of the things that you own versus your debts. You increase your net worth by having the value of the things that you own increasing in value, or reducing your debts, or buying things that then you get to that have a separation between, like if you buy a house under market value, it's 285,000 is what you buy it for, or it's worth 300,000, but your debt is 250. That's $50,000 of value equity. The problem is you cannot tap into that, right? You cannot tap into that unless you sell the property or refinance, right? That's why it's a hard asset. You have to do something. You have to sell it or refinance it to get something out of there. If you have any other ones, you can add that here as well. Then it's your liabilities and your debts. If you have home debt, right? Rental property debts, add that in here. As you pay these things down, it's awesome because you're building your net worth. You build your net worth, once again, increasing your asset value. So as property, like for real estate, properties increase in value, right? And then you pay down your debts over time, or your tenants pay down. That's equity. That's adding to your net worth. That is one of the biggest cheat codes for real estate investing. Yes, there's the cash flow, which you get to live off of. That is what makes you financially free. However, it's the building of equity that makes you wealthy. Your net worth makes you wealthy. Your cash flow makes you financially free. You cannot only account for one or the other. And that's why my spreadsheets, let's just show you real fast. That's why I break that down in so much detail. Like, it's not just the cash flow. You have, in this instance, this one property. I don't know the numbers. It's all just made up right here for this scenario, but you're getting your cash flow, right? You're getting cash flow on this property, $15,351, but you're also paying down $5,884 of debt just your year one. That gets more and more over time. This example is year 5. So as you've paid down $31,000 of debt, that is adding to your net worth. In addition, your property is appreciating in value. It's increasing in value. You need to account for that, and you account for that in your net worth. You account for your financial freedom and your cash flow here, but then your appreciation and debt pay down are benefits adding to your net worth. They're making you wealthy. Then you get tax benefits for real estate. Interest payments and depreciation of your property are tax benefits. And all this stuff increases with time. If you go to this tab, or this, the main analysis, you can see over the 1, 5, 10, and 20-year timeline what's really going on, right? Year 1, you get the cash flow, and then 5 years, you get this much, 10, 20. But then there's also these other benefits. The cash on cash return, how hard is your money working for you in regards to cash flow, is phenomenal in this deal. But then also you get really great return on investment because you're also benefiting from the appreciation, the debt pay down, the tax benefits, and then you get the total return on investment, all these combined with the cash flow as well. So that's why I include that in there, because it's a really great thing for you to track how much wealth are you building. Like I said, you can't really tap into that immediately, but you can sell your property in the future. If you build, there's a property that I have that I bought. My first ever property, when we bought it, was around $170,000. This was in Fairbanks, Alaska. So lower cost, but we bought it at a discount, so it was in foreclosure. Then we ended up selling it 2 years later after renovations and market increasing in value for over $360,000. That was $200,000 that we tapped into. And that is literally, it was the hard asset that we tapped into. It was on our net worth that we tapped into it, and then had actual money from that. There's another problem, my second purchase, which was a 4-unit, right? This stuff builds more with time. Properties that you just buy rarely have a lot of equity unless you're adding value by renovating it. But this other property that I bought was around $320,000. It's worth closer to $420,000. Now it's $100,000 additional value that property appreciated, but also my debt is paid down to under $300,000. So that $320,000 purchase in 2021 is now worth $420,000. and the debt is paid down to under 300,000. That's $120,000 of value of equity that I can tap into that is tracked in my net worth, not in my cash flow. Really smart real estate investors, not those that are just doing the basics, the bare minimum. You're not just looking at cash flow. Understand your net worth and wealth benefits over time. It took me 3 years before I started thinking that way. But this is why people invest in large markets like I do. Like I have properties in San Diego, doesn't make a ton of cash flow, but I get tens of thousands of dollars a year in wealth benefits. That's why I love the co-living model, because I am buying properties in markets that appreciate well, right? They're worth more, especially with creative financing. The debt is getting paid down faster. I'm building my wealth while also maximizing my cash flow. If this is over your head, I have a whole co-living masterclass. I have all these trainings for you to help make this stuff just normal language for you. That's why you need to be in the Wealth to Real Estate School community, so that these words that I'm saying are just common words in your vocabulary. These are not complex topics. Maybe I'm not great at explaining it, but I explain it in very good detail here and show you literally what your returns will look like. I'm here to help you guys. All right. So you have your assets, right? Things that are worth something. And then you have your liabilities or your debts. The same way that compound interest, like the same way that, Einstein said something, and maybe it was Einstein, I don't even know. I'm not a quote guy, but it was along the lines of like the eighth wonder of the world is compound interest. You have something that increases in value. Let's just show you a compound interest quote, Einstein. Let's see. Compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. So the same way, compound interest chart. If they don't have it, I'll show you what this looks like. Yeah, basically. So instead of something just going up in value in like a linear model, right? It's going up 1, 1, 1, 1. It's not compound. It starts adding on top of each other each year. As your property is worth 100,000, it goes up 5%. It's worth 105,000. Well, that next year it's increasing from 105,000 at 5%. I don't know what that math is, but it's more than $5,000. The next time it's even more than that, and that's the compounding benefit. But that works against you as well. So most people in real estate, I just showed you a great deal here, 15% cash on cash return. That is what that is showing you. The problem is it's the exact same with debt. It's the exact same with debt. So if you have 15% increase, which is a great return on an investment, paying 24%, let's say 25%, 28%, 30% interest rate is literally the works against you. He who doesn't pays it. You're literally compounding these losses by not paying off these high interest debts. That's why it's really important to not just understand the value of your debts, but understand the difference between good debt and bad debt. Good debt is buying a property with a 6.5% interest rate, we'll say here, that is then increasing in value, paying you cash flow, and your tenants are paying down your debts, and the debt isn't that high of a percentage because your return exceeds it. However, credit card debt, 30%, financing something that you cannot afford and paying for it and paying really high interest because you're only paying your minimums, that is the worst thing you could do. I wish I could, it's kind of fun doing it like this. So interest credit card chart. I don't know what this is going to pull up, but let's see. I didn't think there would be anything good. Yeah, nothing good here. But in reality, it's if you're paying $100, $1,000, whatever, you're paying significantly more than that. The way your properties compound and all your benefits, like the things that you own, your assets can compound in value, the same way is your credit card debt. It is making it worse and worse and worse for you. So pay off those high interest rate debts. Even before investing, in my opinion, pay off those high interest debts because you're not going to get the returns that exceed a really high interest rate debt. For me, anything over 15% should be getting paid off. Anything for me under 15%, some people would say under 5, 6, 7%, that's the only stuff they keep. For me, it just depends. I have private money lenders at 12%. I'm more than happy to pay them 12% because I am leveraging their capital. I'm raising their money to buy real estate so I can buy more assets using none of my own money. So I get infinite returns, and part of the cost is paying them. But there is no reason to be financing things that are working against you that you do not even need to own, right? I hope that sticks with you. So that is net worth, right? I was going to say simply, I don't know if that was simple, but that is net worth. And the very next training that we do next week is going to be focused on actually achieving financial freedom and how it's a combination of both your budget and your budget summary, because your financial freedom is when your passive income exceeds your monthly expenses. If you don't know what your expenses are, how do you know what goal you have to set? It's very hard to have a goal without numbers and a timeline for that goal. Then it's all foofy and it's really hard to accomplish that because it's not a smart goal. You're just saying, I want to be financially free. What the hell does that mean for you and your family? You have to understand that. And it's personal. This is personal finance. It depends on you, your expenses, and what you want to accomplish. And so we'll break that down, how your budget then dictates your financial freedom level, your goals, level 1, 2, 3, and 4. I don't even know if I did that right. 1, 2, 3, and 4. And I'll explain what all this means and how your real estate works towards your financial freedom, how lending, if you have money that you're lending, how that works towards your financial freedom, how the stock market contributes to your financial freedom, and how all three of these combined, all collectively work towards your financial freedom. Like I said, almost all of my early financial freedom has come through real estate investing. Then as I have more capital, I build even more cash flow through lending. And I also put money in the stock market as a diversified investment. I'm not going to get wealthy off of it, but it's a separate asset I can put my money into, especially in tax advantage retirement accounts. That then is also going to be several $1 million in a couple of decades from now. It's just another thing in my portfolio. And I want to explain how financial freedom is achieved through all of these, through one of these, through none of these. It's ultimately up to you what you're going to do with your life. I just want to equip you with the knowledge that you need to succeed. That is a big part of super investors. If you are contemplating joining super investors or want to understand simply what it is, it's not there's this one strategy and you're going to follow this, you're going to be wealthy. No, it's having more tools in your tool belt, actually understanding things. So when there is a situation of property, you know what is the best solution to acquire that property, to manage that property. What should you do to get the most bang for your buck on every investment? And how do you scale to financial freedom as quickly and as efficiently as possible? Because I don't just own CoLiving. I have long-term, mid-term, short-term, and CoLiving. I don't just buy creatively financed. I buy traditionally. I buy using hard money and then do the Burr method. I buy creatively. If you're doing only one thing, you're really limiting yourself. You're really pigeonholing yourself for no reason at all. And you're just limiting the amount of deals that you can buy, and you're limiting the returns that you can get, and you're limiting your ability to buy real estate based on your own savings, which I could not own $20+ million of real estate because I needed close to $5,000 for that, and I needed to raise that money. I'm military and government. Prior to retiring, I never had enough money to just invest in real estate like that. I needed to learn how to raise money to then buy more real estate that would then generate me more cash flow to be financially free and more ownership benefits, which make me wealthy using none of my own money. And that is what Super Investors is for. If that is something you're interested in, just DM me. I'm more than happy to have a conversation with you. You can just sign up for it on the school platform. I don't advise that. We filter people. We only want the right people in there. And if it's not the right solution for where you're at in your journey, I will guide you towards free trainings and tools that will then help you more than these advanced strategies that help real estate investors scale, right? This is for scaling. How do you become more knowledgeable so you can scale? All right, guys. With that, I will see you next week and we'll really break down financial freedom. If you have not yet signed up for the webinars, I have 4 incredible webinars coming up. I'm dropping the link for you right now. 4 incredible webinars coming up next week. Take advantage of them. All right. Later, y'all. Have a great weekend. Just remember, I failed. I didn't do my challenge yesterday. I didn't post like I thought. I didn't do my live stream like I thought I was going to do. It's okay. We're alive. Everything's fine. We just pick up and keep going. I want you to remember that because there's so much adversity when you're trying to do new goals. I get that it's hard. All right. With that, have a great weekend, guys. My birthday is next Tuesday. If you want to send me some birthday wishes, I appreciate you, but we'll be talking next Tuesday. Bye, guys.